We're going to cover policy in the US, in the United States, UK, and of course the European Union. I think the biggest topic is still policy drama in the United States. It looks like the Genius Act and the Clarity Act, of course, Genius has been passed. Clarity has covered some ground, but the Senate, US Senate stalled it for a bit. And of course, behind the scenes, there's been a lot of back and forth between traditional institutions and the crypto guys pushing for this bill. And there's a lot of politics involved and a lot of money.
Yeah.
Money that has not been made and money that has been made, right, involved. So a little bit of a backstory into what was going on. A lot of these crypto companies have been funneling a lot of money into US elections, quite a lot of money. So in fact, crypto PACs, like political action committees, have been probably top 5 backers of the Republican Party, like primaries, recent primaries, and most of the candidates they've been backing have been winning, and they've pumped in a lot of money. So obviously, it was an investment. They have to make this money back somehow, some way. But the traditional banks sort of have a problem with that situation, and it's causing some friction in the passing of the final stage of the bill. So generally, let's just discuss. What do you think?
So the thing is, you have three, let's say, powerhouses. You have the US, the UK, EU, all trying to regulate stablecoin at the same time. And so what that now means is that they are trying to optimize for different, let's say, different things. I'd say the US is pretty much trying to optimize for um, capital formation. US has always been all about innovation, and it kind of shows in everything that they do. Even outside Web3, they are always very pro from the way their policies, from the way they stake their policies and all. The UK, on the other hand, sort of allow a controlled experimentation in such that they allow you to build, but then there's this heavy regulatory oversight over whatever you decide to do. I'd say the EU, on the other hand, is much stricter because there's almost like a systemic stability, and then they also try to optimize for consumer protection and all that. And you find that this divergence tends to shape where builders will go in the long run. Yeah. And then so if you're a startup, maybe in the US, you find that you have more upsides to it. If you're in the UK, as a startup in the UK, it's pretty much like a sandbox whereby they are giving you free hands, leeway to experiment with building what you want, but there's still this heavy regulatory big brother that's staring at you. The EU, on the other hand, they are pretty much the strictest in that sense, where they optimize, let's say powerhouses or where these countries are looking to optimize, it's kind of dictating where startups or how startups will build. I mean, a few years ago, nobody knew what these things are. Are they securities? Are they, so you still don't know particularly. So what now happens is that they've given you this blanket, like, okay, build. And so what that means is that startups now have more regulatory clarity, oversight. Institutions like banks and fintechs can, come in and they can also play in that. And there's also capital inflows too. But then you still have to consider that probably one of the reasons banks are, pushing back to things like this is, you know, traditionally you have an institution that has been around for over 500 years now, probably maybe even more. I'm not too sure. And then you have this thing that we are not quite sure of, trying to upset the balance. There is this existential threat that they see, and so they are trying to fight against that. It also will also shape how banks will react to stablecoins in the first place too. Because okay, now you have a situation whereby there's this regulation, and then finally we have final regulation. Crypto has always been this obscure thing at the corner of the internet where you don't quite know what it is or what exactly it is. So banks are like, okay, we don't have to worry about this because, well, people use it for crime, and so because they use it for crime, there's this
Undertone.
undertone to it. So we don't have to worry about it. But now it's people that have no idea what blockchain is or what crypto is are using stablecoins. They're sending money and from one corner of the earth to the other. So the banks are going to push back. One of the things they're mostly afraid of is when people hold more stable coins than bank accounts. Because the bank needs your money. You get your money, they lend your money, and that's how they make profits. I mean, that's how banks have always been. So when more people are holding stablecoins and less people are holding bank accounts. That's an existential threat to the banks themselves. Then you also have situations where maybe stablecoin issuers are offering higher yield than banks. That in itself is also another threat. So I don't expect them to take it standing, to take it lightly. I expect them to push back against it. And so when you have this thing whereby they are trying to lobby regulators to ensure stricter controls on stablecoins, they are trying to, create, some of them are even trying to create their own stablecoins and all that. And then the people who are maybe the most lenient, okay, let's combine forces with these people because this thing has come to stay. It's not going anywhere. You understand? You have a situation where you can send money from one corner of the earth to another in a fraction of a millisecond. That's technology. So you can't regulate it that way. That's not going anywhere anytime soon. You have to find a way around it, and then you typically will try different methods and whatnot, and then doing this would decide where policy will go in the long run. Because another thing is if you can figure out what these things are, because we just have this piece of technology that people are using, but we don't quite know what it is. If you can figure out, okay, what exactly are these? Are they securities? Are they? It would tell you where or who is to regulate it in the first place. In my opinion, I don't think they are even going away. The stablecoin is not going away anytime soon. And I think one of the reasons why it challenges the pre-existing, will I say, systems is because first of all, it's efficient, it's effective, and then it competes directly with fiat. And when you have something like that, nobody's going to take that standing.
No, I think you are spotted in terms of the dynamics, the different dynamics between kind of US policy and UK policy versus EU policy. The EU are always quite keen to put a framework in place first. They worry about the business afterwards. They've done that in the AI space, where they created a framework for AI, but didn't really have any AI to kind of protect. So I think the EU have they've been trying to put themselves in the position of supervisory approach for the entire world. So other people can create tech, but the EU focused on the oversight aspect of it. I think you are right that the US is always been pro innovation. It's partly because the US is pro competition and especially competitiveness of the US on the global scale. That's really what drives the US. So that's exactly what's happening here as well. So I mean there are many in the US Congress who are also against crypto. Who were like, this is crazy, we should ban it, it should never be here, etc. Um, but the feeling that other people in the world, and especially China, which is quite odd because China is against crypto and ban crypto, but you hear a lot of US politicians speak about it. Oh, you don't want China to run
to be number one.
to run this. So I think that tends to drive the US towards being pro innovation, to say, we don't want to be left behind. In fact, we want to lead it. US are quite driven by the idea of being first.
I think another thing is it kind of exposes their very nature, the very foundation of these countries, in the sense that, okay, look at when you go all the way back to say World War II now, and then the Cold War with Russia. That's always been their stance. That's always been, okay. We need to be the first to do this. The same way they were always lobbying to be the first to be on the moon and all of that. So it kind of, their nature actually kind of speaks to how they are operating around these policies. And I think it's pretty interesting, really.
I'm not going to ask you if you think they were actually the first on the moon or not. We might get that. But I think yeah, in terms of stablecoin, you're absolutely right that the banks are feeling threatened, right? It's a huge threat on them, and the policymakers effectively have said that they agree with the banks. Policymakers in the US, in the EU, and in the UK as well. Those three areas are actually converging in terms of their approach to stables, in the sense that they're not allowing yields on it, which is an odd thing. It's fundamentally odd to say you cannot pay interest on this asset, but pure and simple, the only reason that they're doing it is to prevent an outflow from the banking system. On the one hand, you might say that means policymakers are trying to protect incumbent banks against sort of startups within the space, which is not an appropriate use of public power. And that's a fair point, right? But I think they would argue back that one of the key reasons we let banks collect deposits is that they would then give out loans. So stablecoin issuers are not giving out loans. So if we take a massive amount of deposits out of the banking system and put it in stable coins, earning yield but not doing anything for the economy, not funding loans, then we have a big problem. We could have a massive drop in credit, and that could trigger it could trigger a financial crisis, but it could trigger wider crisis than that. Businesses cannot access loans, individuals cannot access loans. I think that's kind of where they are coming from. But it's an odd thing. It's an odd thing to say, bank accounts can pay interest, other banking products can pay interest, other financial products can pay yields of some sort, but that stable coins cannot. I'll be very interested to hear what you guys think about who are the winners within that space when stable coin issuers are not allowed to pay yield. Who wins and who loses?
Well, for me, I don't think there's a winner in this situation. Everybody loses. Yes, I know. I think
but the big banks are not losing. They're going to lose eventually. They're going to lose eventually.
It's just a matter of time. Truth is, before everybody started to take crypto seriously, it was because it got so big behind the scenes. The money was flowing out regardless. It was always going to flow out. It will flow out. People will always look for more efficient ways to do things. Yeah, so an average user can, where Binance is permitted, can open a Binance account and convert stables, and basically start yield farming. They don't have to go through any banks to do it. The worst deduction is maybe when they want to convert it back to fiat, they have to pay some tax on it, right? So that's the worst type, or some other fees, processing fees. So the very reason why these banks are taking crypto seriously is because, number one, they know the technology works. Number two, they know that it's just a matter of time. More and more people are going to find use for it, and they're going to the money is going to flow out regardless. So the banks will lose in the sense that the money would still, people just find proxy channels to make it work underground rails to do these things, which is not good. It's not healthy. It's not great for consumers. It's not great for everyday people, because if it is done under the table, that exposes everybody to more risk, scams, frauds, all that. There's not enough regulation. You can't report, cases where you can't report crimes and stuff. So the banks will still suffer regardless. So what makes sense, or what some banks have started doing, is they just started trying to provide their regular services and also provide the stablecoin option, which is, for me, like,
you can't regulate it away. It's not going away.
Yeah, everybody's going to lose, including the everyday people. So if the government that is in the middle of this fight claims to be for the people, right? They are supposed to be the people's representative. What they are supposed to do is make sure they broker some sort of peace agreement. It has to work. That is the.
But they will probably argue that this is what they have now done. Where they've drawn the line. Stablecoin issuers kind of been brought into the fold. That stablecoins now exist within the legal framework, but that the limitation we put on it is you can't pay yield as a way of protecting the banking sector.
But what is the point of that limitation? To me, it doesn't make sense. If you are happy.
No, the point of the limitation is to make sure that availability of bank loans still exists, because stablecoin issuers don't give out.
That's a question we need to ask. Why can't stablecoin issuers?
If they give out loans, then stablecoin issuers become banks, right?
Let's be honest. Are they not
pretty much banks?
That's kind of why. That's the existential threat.
Let's call a spade a spade. So all of these semantics around this is a stablecoin issuer. You're not. These guys are doing volume that some banks are not doing.
Yeah.
These issuers are doing.
But it's a very different type of business, though. So being a stablecoin issuer is a relatively easy thing to do. Like the business model is relatively easy.
Yeah.
So you issue a bunch of tokens, and in return, people give you fiat. And you take the fiat and you go and park it somewhere, and you get paid interest in it. Whether because you bought direct fiat currency, or you bought some bonds. So the state issues bonds, you buy it. It's fairly safe, and you're still getting yield on it, right? So it's a fairly easy thing to do. But being a lender is a very difficult thing to do. Trying to judge credit risk, who is going to pay me back or not, and getting that judgment right across your portfolio is the difference between success and failure for a lending. But I'm not against stablecoin issuers lending. But I guess what I'm saying is that for them that will be a different business model with different skill sets. They need to bring in. It's a far tougher thing to do than to and that same difference exists already in the banking sector. So to get deposits is quite easy. Yeah, you just offer attractive interest rates, and everybody will pack their money with you. To lend it out is a big thing. And you seen fintechs who have taken a lot of deposits, who have a banking license, but who have not lent as much. Precisely because of this. Because you then get a lot of fraud risk, credit risk, etc., etc. So it's a different thing. But yeah, there's no reason why they couldn't do this. But I guess at the risk of defending the policymakers here, because I also find it odd that you can't pay yield. I think they also find a solution that somehow allows you to pay yield, because not paying yield puts stablecoin issuers below banks. There's a disadvantage there because banks can pay you and they do pay you. So that's a fundamental kind of difference, and it's law, like legislation, preferring one type of entity over another type of entity. But I guess what I'm saying is the thing that's driving it is the availability of credit in society. If credit drops and people can't get, and businesses are having to pack up, then I guess politicians lose votes.
Okay, well, I mean, that's a reasonable.
Well, who do you think wins in the long run? If the banks are able to, go on with their plans to.
Yeah, so my position on this is everybody loses.
No, but I guess you know what? It's not. I don't agree with your position. I think your position is. I think it's worth dividing into short-term effect and long-term effect.
Yeah, well,
I think long run. What you're saying is probably correct.
Yes,
people are going to move in this way. Stablecoins are just far more efficient, as you said earlier, than fiat. And because they're on the blockchain, you can program different tools into them. So it's just they're just better. So in the long run, that might be what happens. But I think in the short term, banks win. Because they get protected. The deposit outflow that they're fearing will not happen. So the money stays there. I think the larger crypto firms win as well, because they've already gotten market share, and especially the big stable coin issuers. So Circle, Ripple, they all win. I think smaller firms who are trying to compete and grow market share lose, because the yield would have been the easy way to say, come to us. I think consumers lose. I mean, they want to be able to put their money in stables in a more efficient currency and get yield. I mean, they absolutely lose. So if you're looking for one loser in the short term, it's the users.
It's the users every day. And I like to call them everyday people, because these products actually are designed to cater to everyday people. But thanks. I mean, good chat.